presenter. Thank you.
Thank you very much, and it's a pleasure to be here today. Yeah, so Ntuthuko and I wrote this paper together. I'm going to be presenting today, and he's going to be presenting in Helsinki a little bit later on in the year. So yeah, we're sharing that way, but he will be monitoring the chat and alerting me if he thinks that we should be answering anything in the middle of the presentation. So please feel free to post things there and ask clarification questions, and he will be helping out there. Thank you, Ntuthuko. Okay, so I have to warn you all, I'm coming back from 4 months of maternity leave, so my brain has changed. So we're going to do our best today to remember all of the details. So please let me know you can see the screen okay?
All good, thanks, Maya.
Okay, super. Okay, so the main kind of question of this presentation, and the paper's too long to present all of it. If you need more details and more technical details, you can obviously go and read the paper. But here I'm hoping to give a little bit of a taster and also to link the paper to what we've all been following yesterday with the budget not being presented and the controversy over the 2% VAT increase. So I'm going to try and link it in a little bit with that, and hopefully we can have a nice discussion at the end. So the main question that Ntuthuko and I are trying to answer here is the question of whether or not South Africa should tax more in order to finance more expenditure on social grants. Okay, and the link to the paper is here in the presentation, and I think Ntuthuko is also going to put it in the chat for you, and I'm sure that these slides will be shared with you, so don't worry about that. But just briefly, this is what the link looks like. So Imad has already read out the title of the paper, which is very long. But that's what you can find. So I just want to, the acknowledgements are all in the slides, but I just want to specify that this work is really building on a lot of very good work done by a lot of very good people and thinking that has been contributed from National Treasury, from Salju, and from the Commitment to Equity Institute. So I just would like to acknowledge that as well. So the key questions that we're going to tackle in this presentation, firstly, should we tax more to fund an expansion in social grants? Secondly, if we do decide to tax more, which tax instruments should we use? And thirdly, what would be the net impact on the household income distribution, right? So whenever we provide a transfer, we're increasing people's incomes. Whenever we tax, we're reducing people's incomes. So if we subtract the taxation from the transfer, do we get a net benefit, or do we get a net negative impact on incomes? Okay, so we want to be careful about that. So the work that I do is always concerned with what is the equity implications of any policy decision that we use. So that's really the piece that I'm going to talk about here. And you'll see and maybe find it frustrating that I'm not able to talk more about the economic growth and all of those aspects that macroeconomists will be talking about, and that all needs to be taken into account and thrown into the mixing pot, but it's not what we do. Okay. So first question, why might we want to expand the social grant system? So the South Africa's grant system is important, it's large, and it's well targeted. It's been described as affluence targeted in the way that it actually includes the majority of the population and just excludes the rich, unlike other more stringent targeting systems, which tend to exclude the majority of the population and just include the very poor or the extreme poor. But historically, South Africa's grant system has had a huge gap, and that is that the unemployed have not been covered with this gap. So there's been insurance for the unemployed, but there's not been any grants for those that haven't worked before or didn't have access. So this was rectified to some degree during the COVID era with the SRD, the special COVID-19 SRD, Social Relief of Distress Grant, which was kind of like our first unemployment grant. And it went well with the child support grant and the old age pension, and it filled that kind of gap in our system. But for a long time, it's been seen by government as too expensive. Since the beginning, it's been described as a temporary measure. So first of all, it was implemented in a very urgent fashion. So there's been a sense of we need to improve the ways in which it's been implemented, but also find the money and decide whether or not it's going to be continued or not. So it's had this very tricky trajectory from the beginning, and even now with the release of the updates to the grants, the SRD, there's no information on the SRD whether or not it's going to increase with inflation, etc. So it's also had substantial barriers to entry. And the particular issue with those barriers to entry is that they appear to be a little bit not by chance, but actually a mechanism in order to limit recipients. And I think that's the real issue that people have had with those barriers to entry. And that, for example, is what the Pretoria High Court ruling of January 2025 said. So we've been able to show, however, in previous work that the grant substantially reduced poverty. And I'm sure, sorry, I should have filled that X in, but I will add it in before we send the slides out. And so it's a valuable grant, and it's had a valuable impact, particularly during COVID and a time when people were very desperate, but also has a valuable and important impact at any time for the extreme poor, despite its challenges. In addition, there's been this civil society call to go further than the social relief of distress grant and to actually implement a basic income grant and to ensure that there are no exclusions either by chance or by design. So with that all in the background, it seems clear that we do need social grant system to be expanded. We have to fill this gap. It's playing an important role in the well-being of the South African population. And it's also facilitating things like job search. As you'll see, there's a team at Blavatnik who we've been working with on some of these papers who explain very clearly how those who don't have any money at all are unable to cover the costs of searching for work. They're unable to get the airtime to call employers, the money to print out their CVs, the money to pay for taxis to go and search for jobs, as I'm sure I don't need to tell most of you on this call today. So it's important for a number of reasons. Okay, but the question is, which transfers should we use? Should we continue with a transfer that looks like the social relief of distress grant? Should we implement a basic income grant? Should we do something entirely different? And there's a previous set of work which came out in 2022 where we examined a set of 5 different grant options at the request of the National Treasury. And there we examined things like a household grant, an increase to the child support grant, etc., along with the SRD and a basic income grant. And really what seems to have stuck in the civil society discourse is this SRD and BIG. So that's what we focused on in this paper. And we looked both at an increase in the size and coverage of the existing SRD grant and at the introduction of a BIG. And the slight innovation that I think we've introduced in terms of looking at a BIG is a lot of the literature is thinking about not a non-universal BIG, but actually a slightly targeted BIG, which only goes to working age recipients. And so we're examining both that working age BIG as well as a universal BIG. I'm going to refer to them as the WBIG and the UBIG. And we've also included and actually modeled this clawback mechanism, which everybody kind of waves their hands and says, oh, but the BIG is going to claw back the money through taxes. And actually, it's a lot more tricky than you might imagine. So here we're going to propose one mechanism through which we might do this. And for this, we have to give credit to Chris and Molay from National Treasury, who were the ones that originally suggested this could be a way to do it, which we've now modeled. Okay, so why and how might we improve the SRD grant? So firstly, the budget allocation is too small to cover the eligible population. The 36 billion allocated by National Treasury for 23-24 was sufficient to cover the costs of about 9 million recipients, where according to our estimates, about 17 million people theoretically should have been eligible for the grant at the food poverty line threshold, which is already a very small threshold. In addition, having that very low threshold for the means test exacerbated the errors of exclusion. It was very, very easy for people to be unfairly excluded because the threshold was so low, and even people who were extremely, extremely poor. In addition to that, the kind of urgent nature with which the grant was implemented, but also the need to limit because the funding wasn't enough, meant that the determining who was eligible for the grant was done through this bank test where the banks would say there's cash flows of more or less than this amount going through this person's bank account. There's a number of issues with this, but the first issue is those cash flows may not be income. People can be receiving intra-household transfers, in which case you would be double counting those cash flows. People can be receiving loans, in which case to consider that to be income it seems deeply unfair. So there are a number of ways in which you might be picking up something which you wouldn't want to be picking up there. Yeah. Also, the current grant has not been adjusted to keep pace with inflation, even, let alone to kind of increase to actually be an amount that is more comparable with other grants and enough for people to live off. So in a kind of a task team on basic income support policy note from 2023, there was a recommendation that the income ceiling for the SRD means test be increased to at least the size of the upper bound poverty line, which at that time was 1,417 rand per month. And that an average measure of income inflows could be used rather than a point in time measure, so that you, if there was kind of lumpy consumption happening or lumpy loans being taken out, then that was something that you could control for better. There was also the recommendation that the UIF registration be removed because that was unfairly excluding people as it wasn't being updated properly by businesses, and that the size of the grant be increased to 510 rand per month. So what we concluded from this work and from the problems that the SRD has been facing is that expanding the size and threshold for the SRD grant would be a large step forward in terms of improving social protection in South Africa and reducing extreme poverty. What about a BIG? Why might we want to instead implement a BIG? Well, there's an important moral case and constitutional right to provide support to poor households. And the BIG prevents the sort of unfair exclusions that are happening in terms of the SRD, and therefore means that that moral case will be fulfilled, that constitutional right will be fulfilled. There's also the possibility that it would have a positive economic impact on local economic growth and livelihoods. And while there's not much research on this, it seems fairly obvious that providing more income to people in areas where historically and geographically there is very little income would start to increase the amount of services and development in those areas, just from a more kind of logical point of view. It also provides for more solidarity and cohesion in a country like South Africa, which is extremely polarized because of its inequality, which has a whole host of potential implications for the future, right? Including things like the possibility of conflict very far down the road if something isn't solved and if we don't deal with these sorts of issues. It provides the ability to give emergency support during times of distress very quickly. So everybody's in the system. We don't have to register people and get them in the system. And it can provide improvements in the effectiveness of existing grants, such as the CSG, because the child support grant doesn't have to be used to fund an unemployed person in the household. It can be used to fund the child for whom it's designed to be funded. So as I've said, we've introduced this innovation when we're thinking about the difference between this working age BIG versus a universal BIG, and both of them with this clawback mechanism. So these are all extremely valid points about a BIG. What then might the con be? Well, obviously it's extremely expensive, although we'll talk a little bit about a way in which we might offset that. And secondly, we might be able to get very similar levels of gains using what we've called an affluence tested grant rather than a universal grant. So South Africa's affluence tested schemes are not far off the error rates of universal schemes. So the best universal schemes have an error rate of about 2%. South Africa's affluence tested old age grant was about 8%. So pretty good, whereas a lot of poverty targeting schemes had error rates of more than 50%, right? So there, at that point, you're getting to like worse than random in terms of whether people are included or not. Okay, so let's just talk a little bit about this clawback. And part of the reason I mean, it's not crucial, but I think that it would be useful for the discourse for people to start to understand a little bit more about the clawback. So a brief little kind of teaching moment. As most of you, maybe all of you know, that the income tax in South Africa is calculated as a graduate rate, right? So this means that a portion of an individual's income falls into the lowest bracket. The next portion falls into a bracket with a higher rate. The next portion falls into a bracket with a higher rate. So everybody's income who is being taxed for income tax will have some income which is taxed at an 18% rate, right? And wealthier people will then have some income that's taxed at a 23%, etc., until you reach the 41 or 45%. So, for example, an individual earning 300,000 Rand per year will pay 18% tax on their income below 237,000 and 26% on their income above. Okay, so that's just important for understanding that if you give very wealthy people a big, not all of that income is going to be clawed back through the tax system. So you're going to lose a fair amount, more than 50% at least, of that basic income grant going to incredibly wealthy households, even millionaires, if it's all getting kind of automatically dispersed. So that's inefficient, right? And an expensive way of doing things. So that's just something to keep in mind. So one of the things that we can do in terms of a clawback is, instead of using those graduated tax rates, to instead work with the South African tax threshold, and to use that to actually claw back 100% of the grant. So what we would do would be, for example, to drop the threshold from the 95,000 that it was at the time. I think this is 2023 numbers. So if you look at this graph shows if your annual tax payment is sort of 20,000, your rebate would be fully covered. And so it's at this point where you would not be paying any tax post your rebate. Your rebate is the size of this blue area here. The blue line here is showing your tax liability pre-rebate, and the orange line is showing the light blue line is showing your tax liability post-rebate. So you see, prior to the rebate, you have this tax liability, and post the rebate, you have none. Okay. Now, if we move that rebate lower, well, first of all, one point that I want to make here is that for people who have lower tax liabilities, they're receiving less of a rebate. So this is quite a regressive way of supporting people. And people with slightly higher tax liabilities are receiving more of a rebate. So that's one thing that makes this quite a nice measure, and the clawback quite a nice measure. And so one of the ways that you can then reduce that is by moving the threshold down and simultaneously providing a big, so that those people in the lower ends of the distribution here will have a net benefit of above zero, because the big will be cancelling out the additional amounts paid. So here you'll see that they're not receiving the total amount of the big, because they're receiving some, they're losing some of the money that they would have gotten from the rebate. Here they wouldn't have got any money from the rebate, because they wouldn't have paid tax, so they would have received. So they received the full amount of the big, and here they receive nothing because it cancels out with the full amount of the rebate. Okay, so if we look at the incidence of the, actually, let me go to, let me start off by just looking at the cost. So if we examine and compare this SRD 370, which is the kind of the current system, with an expanded SRD, which is the 510, along with the increase in the threshold from the food poverty line to the upper bound poverty line, we can compare that with a universal big of 510 Rand that goes to everybody but has a clawback for people above the threshold, and compare that with a working age big, which has a clawback for people above the threshold. So the key distinction that I want to make, and it's really important to understand here, is that the universal big in this scenario replaces the child support grant and the old age pension, for kind of obvious reasons, right? The big is designed to cover everyone in the population, and you kind of would be double counting if you'd have the big along with the CSG and the OAG. So that's why the cost of the, so here on the left you can see the cost of the grant. Let me just put my pointer up. Here on the left you can see the cost of just that grant itself, the SRD, the expanded SRD. The universal big would be 300 billion, and a working age big would be 145 billion. But then here we take into account the fact that in the case of the universal big, we replace the child support grant and the old age pension. So here we include the cost of the child support grant and the old age pension in each of these scenarios. And you can see that actually the working age big ends up being more expensive because the amount of the old age grant being provided is larger than the amount of the big. And the amount of the child support grant is also slightly larger than the amount of the big. So actually in the working age big, the non-universal big, you're actually spending more in this scenario in terms of the total system. Okay. Okay, so let's talk about incidence. Incidence is like the bread and butter of the work that I do. And what incidence means is we're trying to understand the benefit or the burden that a particular tax or transfer has for households. Okay, so we can look at the incidence of a transfer, in which case we're much is that, but the benefit that transfer feels like for a household, and we can look at the incidence of a tax and we can say, okay, how much is the burden of this tax on a household? Now, of course, what we want to indicate when we look at incidence is the fact that for someone earning 100 Rand a month, a grant of 150 Rand feels like a huge amount. Whereas for someone earning 1 million Rand a month, it feels like nothing. And it's not even worth giving it to people, right? So the incidence is when we measure the amount of a grant as a share of people's incomes in order to try and get a sense of that felt experience, okay? So is my income increasing by 150%? If I'm in the poorest decile and I'm receiving an SRD, the CSG, the OAG, then my income might increase by 150%. Whereas if I'm in the 10th decile and I'm receiving that, my income's increasing by a negligible percentage of my total income because my income is very large. Okay, and something which is just useful to point out in the case of South Africa, because we have so much inequality and such a large number of vulnerable households, actually people only start paying income tax at about the 8th decile in South Africa. We have this very small tax base, and these are the people that are paying income tax, and these people are not. Okay, so if we look at the left-hand scenario of the SRD 370, this is the current system. This is what we see, okay? That people are receiving something like 40% of their incomes in the SRD grant if they're in the first decile. And if they're in the second decile, it's worth about 25% of their income. Now, if we shift to the SRD 510, we can see that the SRD is this blue grant. The size of it goes up, of course, because now the same number of, actually not even the same number of people are receiving it. More people are receiving it because we're also shifting the threshold up, and also the size of the grant is increasing. So the benefit for this first decile feels quite a bit higher, goes up to sort of 75% of their income is being, which tells you that 75% of their income is about 510 Rand, right? So it shows you how small their income is. So here you see the impact of increasing the SRD, the incidence, the kind of the benefit that households feel of that impact. And you can see that it makes no difference to the upper deciles, right? You can't see the difference. A U-big, here you see that there's only one grant because we've replaced the child support grant and the old age grant with this universal big of 510 Rand. And you can see also that there's this clawback, which is reducing incomes, and which is reducing incomes for people in sort of the 7th, 8th deciles by more than it is for the poorer deciles. And finally, we have the working age big on the right-hand side, which is provided in conjunction with the child support and the old age grant, but only provided to working age people, and also has this clawback mechanism, which is subtracting incomes from some people. And you can see that the incidence of the grant system is highest in the case of the working age big than for any of the other grant scenarios. Okay, but also what we will see is, of course, the cost is a lot higher. So the benefit is higher, but the cost is higher. So the question is, are you getting a lot of benefit for the cost that you're paying? Right, that's the kind of thing that we want to take a look at. And so we can look at that with this slide here, which shows us the efficiency. So in this case, we're looking at what is the impact on inequality and poverty of each of these transfers into what is the ratio of the impact to the amount of money spent. So basically, we're looking at what is the change in poverty in terms of percentage points of if we were to change the transfer by 1 million. If we were to increase the transfer by 1 million. So the SRD here is most efficient in terms of targeting inequality. And this is because the money is being given to the extreme poor. So the gap between the rich and the poor is being reduced by almost all of the amount of money which is going to the SRD. With the big, it's less efficient in terms of inequality because a lot more of that money is going to richer households, and some of it might even be going to households that are above the poverty line but below the tax threshold. So they're still vulnerable, but they're not considered poor according to South Africa's measurement of poor. So if you're targeting extreme poverty versus total poverty, the SRD seems like a better measure. But we have to take into account that those people who are below the poverty line are still incredibly vulnerable. And so if we want to also take into account those people, then the UBIG ends up being a better measure because it's also going to people who are above that extreme poverty line. Yeah. Yeah. And households who are receiving it are wealthy enough that when they receive it, they can be pushed above the total poverty line. Whereas households that are receiving the SRD are not wealthy enough to do that. So when they receive the 510 Rand, it doesn't lift them above the total poverty line. It only lifts them above the extreme poverty line. So that's the key there. So the question is, do we want to focus on the extreme poor? Do we want to focus on all poor households? And also, how much does things like simplicity of the grant system and fairness matter, right? These are all things we need to take into account. Okay, so our next question that I put up on the slides is, should we pay for this using taxes? And this is not something that I know much about, but there's a number of things that have been kind of thrown out that, you know, we could be borrowing more, we could be growing the economy to pay for this, we could be printing money to pay for this. And I can't evaluate whether those are good options in the long term, but certainly they don't seem like good short-term options for a number of reasons, right? Growing the economy may or may not happen. And if it does happen, it may or may not go to the poor, and it's quite likely that a substantial proportion of that is going to be going to the wealthier people who are better at capturing the share of income from capital. So borrowing more has the problem of debt that has to be paid back, at least in the framework of the way that the current administration thinks about debt, and printing money is not something that is currently seen as viable from a global point of view, and possibly isn't either. So according to kind of us, at least in the short term, taxation is the best option. If something like inclusive economic growth was to happen in the medium term, then you could start to reduce the amount you're taxing. So if we include sort of a set of taxation scenarios, I just want to check, how am I doing for time? I need to stop. Okay. So these are the same graphs that you saw before, except that now you can see both the tax side. Okay, so we've split the population in terms of income into 10 deciles, and now you can see how much they're receiving in transfers versus how much they're paying in taxes. Okay, so we have the current system here, which is in some way we can say it's being paid by the current VAT and PIT, value-added tax and personal income tax. And then if we were to expand it, we would have to then find additional funding, and we could do that through, for example, a 1% increase in the PIT with a 1% increase in the VAT. And I'm going to address shortly the issues with the VAT, but I'm just going to, so just to push forward on this, here we showed some other instruments which we would need in order to fund the entire additional amount of the UBIG, and that would be things like introducing a surcharge on incomes, and I'll show what those are shortly. So these are the tax instruments that we used. So 1% increase in PIT and VAT rates was able to fund the increase in the SRD, a 1% increase in PIT and VAT rates, plus a 1% and 3% surcharge on incomes above 500,000 and 1.5 million was able to fund the U-BIG. And then to fund this working age BIG, we had to implement what we're calling the IEJ surcharge, which is the rates proposed by the IEJ in one of their papers to fund some of these instruments. And just to point out very briefly, we're not able to model corporate income tax or inherited wealth tax because we're working with survey data and income flows. So that's a big limitation of our model. So we can also take a look at the efficiency of the tax instruments. The PIT is obviously, and notice that they're negative here because it's increasing poverty because we're taxing. But by, the PIT obviously increases poverty by much less than the VAT because of the threshold protecting the poor. Nonetheless, there's a lot of risk that the kind of income gains from the PIT might not materialize. And we're unfortunately haven't been able to model those behavioral changes yet. And that's something we'd love to extend in the future to incorporate those. We did try, but we weren't happy with the results given the parameters that are available currently for South Africa. And so we might want to choose to prioritize the VAT for pragmatic reasons. The gains are more likely to materialize. It's considered fairer in some ways by the wealthier people who are the tax base, who are threatening to leave the country, etc. It's politically, and then of course there's this question of economic growth, which needs to be taken into account. So massive caveat is that we're not able to include these behavioral effect limitations. But I just want to very briefly add, and before I stop, and is that the VAT is often seen as a very regressive tax. And that's partly because of the way that it's measured. Often modelers don't include informality. And we also haven't included it in this model, but you can look at examples. There's a paper that you'll see in the slides here, which shows you that the impact of informality can actually push the VAT from appearing regressive to actually being progressive, because it protects the poorest and it protects those kind of small businesses that have a threshold that's not easy to model. But also, we need to look at the system as a whole. So if we take a look at the VAT here in the poorest decile, and we compare it against the increase in the tax system from the SRD, you can see that the increase in the VAT is much less than the SRD. So on net, the poor are benefiting from having something like a VAT and a very progressive transfer more than if we implemented a PIT which didn't increase poverty, but didn't materialize income gains and didn't pay for a progressive transfer, right? So we need to look at the system as a whole, and that's what this paper is really sort of designed to do. So to finish off, the SRD has the lowest total impact of the three packages examined here, but it's also the kind of the cheapest, the easier to implement, and still lifts an additional 88 million people out of extreme poverty. Sorry, about no, those numbers are wrong. We'll fix that. And a 2% increase in the VAT to fund an expanded grant program, therefore, from our perspective, would still be a large step forward, even if it could potentially be done in other more progressive ways. From a equity standpoint. So the caveat with the SRD is that errors of exclusion could leave those excluded worse off overall, and it's very important to achieve some measure of universality for at least those vulnerable populations. So this could look like a U-BIG in the place of the CSG and OAG, or an affluence-tested SRD, or even a WBIG. Thank you. Very sorry for going over time.
Thank you, Maya. I think it was a really nice, interesting presentation. And now I think you can open for questions and some clarifications. Maybe we can allow Jordan to just probably maybe share some information from the chat. If we can start from there, and then we can take some 3 questions.
Wonderful. Thank you. Thank you so much, Maya. We've got one question in the chat from Ayanda. With concerns about inflation and consumer spending, did the paper consider how a VAT increase might affect business pricing strategies or economic growth?
Yeah, no, sorry, that's not our area of expertise. So we have to put this together with kind of other sets of information in order to understand that. But I think one of the things that I would say on that is that, from my maybe slightly radical opinion, the fact that economic growth might be reduced slightly less than it would be otherwise can't be the thing that we use to decide all of our equity policies, because then we would never make any changes. And that's what's been done until now. And we see that inequality in South Africa is only rising, right? So something has to happen. And if that means slight trade-off, and we're not saying reduce economic growth, but if that means a trade-off with economic growth, I think that's something which might have to happen.
Thank you. Thank you. I'm also going to invite people, if they would like to say a question out loud, if you want to put up your hand. But for now, I'll just carry on reading from the chat. We've got something from Ryan here that says, what about reallocating transfers to public corporations and private enterprises of 102 billion rand? And there's a link there from Stats SA.
So I think this trade-off between, I'm assuming, Ryan, I mean, without more details and without having read that link, I'm assuming that what you're talking about here is something more about trying to encourage job creation and encourage people to kind of stand on their own 2 feet rather than receiving and being dependent on grants. And that's really
No. I mean, I fully support the basic income grants. I think it's sort of obvious and critical. And I don't really see why there needs to be necessarily a trade-off with growth. I'm not familiar with the growth literature on that and so on, but if people are able to look for jobs and find jobs and move around more easily, I don't see why that's not actually better. No, I meant actually we subsidize, Eskom and Transnet and all of these various public institutions and private institutions, by the way, to the tune of about 102 billion rands per year, more now. And I just was suggesting, I mean, that is pretty much the funding gap, give or take. I mean, I know there are lots of scenarios and all of that, but give or take, that's kind of the funding gap. And if we didn't have to do that each year, you'd have millions and millions of people, at least whose poverty would be a little bit more relieved. So that's what I wanted to raise. I know that's outside of your scope, you're looking at survey data, etc., but I just wanted to say that because I think it's something to think about.
Well, it's actually not theoretically out of our scope. It is something that we could add in. The kind of the basic fiscal incidence model that we work on, it does allow us to measure, because we know from the survey how much people are consuming in things like electricity and water. We can calculate how much people are being subsidized in those areas. So some of those transfers we would possibly be able to model the reallocation of them. I'm not sure what the full 102 billion constitutes, but definitely from the kind of equity and efficiency perspective, we would always say it makes more sense to give a progressive transfer and reduce subsidies, because a huge portion of subsidies goes to wealthy households because it's not targeted very efficiently, right? So I, in theory, don't see any issue with that, yeah. And also good for climate change, possibly, at the same time.
Thank you for that clarification, Ryan. So we've got a question here from Karabo, who is from the Gauteng Department of Social Development. And the question is, can we work on options we may have to open key sectors of the economy 24/7 for economic growth, so as to come up with a win-win situation for SARS to generate more revenue?
I think that's quite a tricky one. I think there's like a lot that would need to be thought about that. I think one of the things that we'd have to do is solve our electricity crisis before we would do things like that, right? So there's constraints in South Africa to economic growth that we need to think about. I think making people work 24/7 and not rest properly is the precarious sort of employment that we're not necessarily looking for. I tend to, I suppose, want to lean more on finding green solutions, to training people up for the sorts of green things that the Just Transition is talking about doing. But again, I mean, yeah, you'd have to speak to an industrial economist probably to answer that question properly for you.
Wonderful, thank you. Duruzile says, could expanding direct cash transfers like BIG unintentionally affect work participation, especially for informal workers? For example, might some people reduce their working hours, underreport earnings to stay eligible, or could employers lower wages knowing their workers would have extra income?
Right, so one of the things about the basic income grant it's that everybody receives it, right? So there's not going to be any report. I mean, it's one of the things that people really like about the basic income grant is you don't have these areas of reporting because everybody's just getting it, and then it will be potentially clawed back through the tax system, and then they will have to have their, they have to audit and do all the things that they do anyway to make sure that people are reporting correctly. The other thing is, I don't think you would get many people for 510 Rand a month who are earning a decent income wanting to kind of underreport their hours, right? So again, it's this question of who are you trying to exclude? You're trying to exclude people who are already poor or who are already very vulnerable, because most people who are earning a decent salary, even 20,000 Rand a month, they're not going to go and spend ages trying to falsify documents in order to get 510 Rand extra a month. It's not worth their time and their effort, right? So that's what I like about the affluence grant idea. You get some gains in terms of efficiency, but you allow people to sort of basically opt in and say, I need this money. It feels important to me. And so I'm going to make the effort to go and get onto the system and get it. In which case I believe they should have access to it. Whether or not it might unintentionally affect work participation, it very well might provide a sort of a floor, a sort of a minimum wage. And again, from my perspective, that wouldn't necessarily be a bad thing, because people working for very low wages on very precarious jobs, and particularly in unsafe conditions, etc., if they have a right to say, I'm not going to do that because I can survive off this 510 Rand a month, I think that can only be considered good.
Thank you, Maya. Grayson, would you like to unmute yourself and ask a question?
Yeah, thank you. Thank you very much. Just a small one, because if I take South Africa as among the countries in Africa with a very strong economy, right? If you compare with some of the African countries. But I just want the presenter to say something about the economic growth of South Africa versus the inequality which she was talking a lot about. Because I want to compare with my country, for instance, Tanzania. If you compare the inequality versus the economic growth, there has to be some convergence or divergence. So I want just to hear about what is happening in South Africa. Thank you.
I wonder if someone else might feel better placed to answer this question in the chat. If anyone wants to jump in and answer this, feel free to turn on your videos or put up your hand. As I said, I'm not an expert on the economic growth aspect, but I can tell you, what I can tell you is about the change in inequality over time. And I think the sense of a large number of South Africans is that that is the case because of the pathway that we took, which was very market oriented. In many ways, we are more capitalist than most European countries. And we have the economic growth that we've experienced, despite the huge amount of work that the government does to redistribute. And you can look at our paper, which shows that, right? South Africa does more to redistribute income than sort of any other country in the world, but it's temporary. It gets redistributed every year, and then the market gives its proceeds very unequally every year. And there are a huge number of barriers to people being able to get out of that cycle. So I think something needs to change in the way that we're doing that. We can't just keep doing the same thing and hoping for different results, right? I don't know if anyone else would like to add anything to that.
Gonna move on then. So what criteria was used to categorize the citizens to qualify for big and child support grants? Could individual biasedness contribute to the current findings? From Joseph.
Right, great question. So you'll notice I talked absolutely zero about methodology in this paper, which is confusing, possibly confusing for some of you, and for some of you possibly wonderful. But if you want to tune in for Ntuthuko's presentation, if it's going to be, I'm sure his will be much more focused on methodology. I was tailoring this more to policy conclusions. So that'll be later in the year, and we can let you know about that. But the child support grant was observed in the survey, right? We got we asked people, did you receive the child support grant? How much did you receive? And because of that, we know who received it. And then we updated it for time, because unfortunately, our last official survey data is from 2015. So it's very, very out of date. We did lots of work updating it for COVID, for loss of employment, for inflation, etc., all of that stuff, including demographic changes. Now, when it comes to the basic income grant and the SRD, those didn't exist in 2016. So we weren't able to ask people whether or not they received them. And instead, we had to simulate it. And so what we did was we worked a little bit with the criteria that the Department for Social Development uses, but they're not actually implementing the criteria, the theoretical criteria that they're using on the ground, right? So on the ground, the criteria look quite different. In theory, your individual income should be below a certain threshold to access the grant. In reality, because they're observing intra-household flows, they might be excluding also people who have a household income, an average household income below that certain value. So we had to make a number of assumptions to try and reach what we felt was the actual situation on the ground. And I think we got quite close to it, given the data limitations. I feel that it was pretty good, but obviously, nonetheless, has its limitations. So could it be, in terms of the basic income grant, there can't be any bias, right? Well, because the basic income grant is going to people, we observe their ages, we give it to everybody of working age, or we give it to everybody in the case of the universal. So there can be no bias there. There can be a little bit of bias, and there can be no bias in terms of comparing that with the CSG and the OAG, really, or not much, but there could be some in terms of the SRD if you felt that we hadn't modeled it right. So go and read our methodology and see what you think. Yeah.
Wonderful, thank you. Daniel says, excellent and timely paper and presentation. And then also says, just wondering why model a UBIG that replaces the CSG and OAP, but is only valued at 510. This is less than the CSG and OAP, and therefore would reduce the incomes of CSG and OAP recipients, making this an unfeasible approach. Would it be more enlightening to model a UBIG at the level of OAP, for example?
That's a great question. Thank you for asking it, because I should have explained this. So the reason that we did that is because we felt that the WBIG was an amount which was just totally out of the water in terms of what National Treasury is considering in terms of an increase. And so we were trying to find ways to still get the benefits of the BIG, right? The fact that you can't have areas of exclusion, you've still got this access to emergency scale-ups and all of these things. You got the benefit of the BIG, but it's at an amount which we feel the Treasury might feel that they can possibly afford. Now, the other reason why I think it might be possible to justify it is I think one of the reasons that the OAP is large is because it's generally understood that that pension is funding more than one person in the household, right? It's looking after a lot of unemployed people in the household as well as the elderly pensioner, and it's often used to buy food for the entire household. So if you took away that need for the old age pension to cover the entire household, because now everyone in the household is receiving the BIG, then you can rationalize reducing the amount of the old age pension potentially. So that was kind of the conceptual theory behind it. But of course, as Ntuthuko said when we first discussed this, no one's going to accept that, which may be the case. And we were just trying to put out kind of example options and also open up the discussion a little bit to the fact that a lot of the benefits of the BIG are about the universality, and that wasn't really being discussed perhaps enough.
Thanks, Maya. Okay, we've got about 6 minutes left. I'm going to ask one more question and we can see if there's time for another. But for now, I think this is probably the last one. So from Sienda. On the IEJ surcharge/social security tax, your modeled result is an increase in extreme poverty and total poverty. The IEJ's proposal is for the tax that is collected to be ring-fenced for a cash transfer. Does the modeled result consider the impact of tax with the combination of the transfer? If not, in that case, is the effect on poverty still negative if it's accompanied by a decent transfer?
Yeah, another great question. Thank you. Yeah. So that page that I showed on the slide showed only the transfer on its own, exactly. Sorry, the tax on its own. If you look at the incidence graph and you compare the transfers and the taxes, you can see the impact. And I didn't have time to really go in depth into the transfers and the taxes together. And also, if you look at the paper, there's many more kind of graphs, which I know of, kind of, I didn't want to give everyone graph fatigue, but you can look at the progressivity, the overall impact on poverty and inequality of the combinations of all of these packages, etc. So it's all in the paper, but not in the presentation. And no, it's not still negative. It is slightly less progressive than some of the others, because the IEJ tax explicitly taxes people below, I think below the current threshold, or people who are in kind of that middle part of the income distribution that are not being captured by the current personal income tax. So it's slightly less progressive for that reason. But it collects more money and therefore allows to fund more and pay for that progressive grant, so that the total net benefit is positive.
Wonderful. Thanks, Maya. I think we probably have time to squeeze in one more question. So what were the modeled effects of UBIG on social security? Specifically, what are the incentives / disincentives of UBIG and the formalization of informal workers?
Right. So one of the big challenges with the current SRD is that it excluded people who were employed, which is a very problematic thing to do from the point of incentivizing people to work. We don't want to incentivize people to not work in order to qualify for a grant. If you're earning so little that you need to apply for a grant anyway, then you should be able to get both, right? So I think the current SRD is very problematic in terms of the incentives to work. I think that the BIG is not problematic because the BIG is not very much money. There are very few people who would say, oh, I've got a BIG, I therefore don't need to work at all. And but they might be able to avoid doing extremely dangerous, illegal, unsafe sort of jobs, possibly through a BIG. Or search for jobs, etc.
Wonderful. Thank you so much, Maya. Amable, would you like to come on and close us off?
I would love to just give Ntuthuko an opportunity and to also say if there's anything he wants to add. Is that all right?
Absolutely, go for it. Thanks, Maya.
Yeah.
Yes, I mean, so firstly, thank you everyone for joining us. And yeah, like Maya, just your presentation was pretty well. That's great. So thank you for presenting this. Yeah, that's all. And by the way, if you have any questions, just feel free to send me an email or anything really, if you have like paper related questions. Yeah.
Very good. Thank you. Thank you, Maya, for the presentation and the participant for interesting questions. I think there are a couple of other questions, but unfortunately due to time, we just close, but you are welcome to also go on the website and read other interesting papers on ACTIDE website, and more specifically, get to know more about what we are doing and how much we contribute, and where you can just find more resources that can help to understand what's going on in South African economy. Thank you so much, and we are looking forward to meet you again in a couple of weeks for the ACTIDE seminar series. Most welcome.